Hey guys, this is Dan Carlson with Realty Executives here in Knoxville, Tennessee. Today we're going to be doing a Knoxville housing market update. We're going to compare current market situations to where they were this time last year, as well as current market trends compared to pre-pandemic trends. Okay, so a few things to note. We're using the last full month's worth of data, which would be September of 2022. Once October closes, we'll have that full month of data. But obviously we're still in October, so we don't have that yet. All data comes from the Knoxville Area Association of Realtors, otherwise known as KAAR, and data is exclusively in Knoxville, so it's not including the surrounding areas. First, we're going to look at number of listings. You have active in the red, new in the brown, sold in the black, and all three of these kind of follow a similar trend. They all start going down mid to late fall. And then once the year turns, you see a spike in activity, and all of those are on the rise. Now, if you compare this to pre-pandemic levels, you see similar trends seasonally. But obviously in the current market, those differences are much more pronounced than they are in the pre-pandemic levels. Okay, so here we're looking at listing prices. You have active median list price, new median list price, and sold median sales price. And they all follow a pretty similar trend as well. So the ones that I'm going to be focusing on are the new median list price and the sold median sales price. And as you can see, they really start to plateau out really once we hit around June of this year. You've kind of seen them start to level out and then even drop a little bit in the last month or so. Okay, so now we're looking at current listing prices and how they compare to pre-pandemic listing prices. As you can see right off the bat, the gap between the active median list price and then the sold median sales price is much more pronounced and much more significant pre-pandemic than it is currently. So this kind of gives you a good idea of, what's sitting on the market as opposed to where things are selling at. Now, if we're talking about active median list price, that is a snapshot on the 15th day of every month to keep it consistent from month to month. Okay, so now we're looking at absorption rate. And so what absorption rate really tells you is it tells you how balanced the market is. So for reference, a balanced market is around 6 months. They say about 5 to 7 months, but we'll split the difference, say 6 months worth of inventory. So obviously, the lower inventory that you have, advantage to the sellers. The higher inventory that you have, advantage to the buyers. So around this time last year, we were sitting at under a month, and now we've kind of made our way up to right around 1.3. So we're trending up. Things are starting to shift to the buyers. Now, if we compare this to pre-pandemic levels, pre-pandemic, we were sitting at just under 3 months. Let's call it high twos, and then we fell down to the low twos. So we were still over that 2 month. And now, as you can see currently, as we just discussed, we're under 2, we were under 1, and now we're kind of inching our way back up to 2. Okay, so looking at sold to list ratio, this kind of shows you what people are listing their homes for and what they're getting as a percentage of that list price. So around this time last year, people were getting just under 100%. That went all the way up to above 102%, so around 103% at its peak. And now it's kind of fallen back down to just a shade below 98%, which is still good for sellers. But as we discussed, things are trending back towards the buyers. Now, if you compare this to the pre-pandemic era, people were getting 96. And then as the year went on in 2019, they were getting closer to 97.5, getting real close to 98%. Okay, now looking at days on market, a little bit of context for this. We're looking at average agent days on market. What our MLS likes to use is agent days on market, which just simply meaning from the time that it goes active to the time that it goes pending. So if you're looking at median days on market, that number is going to be a little bit lower. It's going to take out the highs and the lows. It'll take out the outliers. But for our purposes here, we're using average agent days on market. And from October of 21, you're right under 15. We went up during the winter months, kind of as that seasonal trend that we noticed earlier. And then it falls as activity picks back up. And then now it's back on the rise, and we're right under 20 days right now. How does that compare to pre-pandemic levels? As you can see in the pre-pandemic graph, getting all the way up to 60, and then the market really started taking off towards the back half of 2019, and that number plummeted all the way down to 31, 32-ish range. So we still have a long ways to go from 18, 19 all the way up to get to where we were right above 30. Okay, so looking at price volume, a little bit of context for this graph. This is simply a sum of all of the listings that fall into active, new, or sold. And as you can see, that number has risen as well, kind of following a similar pattern of the activity of things going down in the colder months and then rising in the warmer months. And how that compares to pre-pandemic levels, as you can see, similar to a lot of the other graphs that we've seen, they follow a similar trend, but the differences are much more pronounced in our current situation than they were pre-pandemic. Okay, so looking at some summary statistics here, you have several different things to look at. I've highlighted what I've found significant, in my opinion. First, looking at the absorption rate. This time last year, we were under a month. Now we're up to right under 1.3 months. May not seem real significant, but if you look at the percentage change, you're up 34% year over year, which is just another sign that things are trending back towards the buyer. If you can recall from earlier in the video, the absorption rate is a good indicator of how balanced the market is. 6 months is a balanced market, just for reference. Average sales price, you're up 14% year over year. Average agent days on market, you're up from 12 to 18, which is a 50% increase. As I said earlier, I think median agent days on market is a more accurate representation of what we're seeing. But even there, you're at 4 to 6, which is still a 50% change. All of this data is showing us that things are trending back towards power to the buyers. Okay, so one thing that just kind of caught my eye scrolling through the data here was looking at the percentage change at different price points. As you can see, everything under the $300,000 price point, there is now less availability than there was this time last year, as would be expected with rising prices. But it's a real shame that a lot of the first-time home buyers now are kind of being priced out of the market, because if their wages are being stagnant compared to the rate of inflation, it's only becoming more and more difficult. Combine that with rising interest rates to be able to afford a house. All right, well, that's all I got for you for today. I hope you found some value out of this video. If you have any questions, I've linked my contact information below. Please feel free to reach out. I'd love to talk to you. I hope that I can continue to provide more value with every video as I continue to do these from month to month. But anyhow, thanks for watching and have a good day.